Here's yesterday's NASDAQ, and then we'll go into today. Yesterday was another one of those just, dream days. At 9:30 New York Open, which is 6:30 Pacific, the prices are up at the upper bands. No trade. We never buy when the blue bar is up at the blue line. The same way we'd never go short if the red bar was down at the red line. So the blue bars are all at the upper band. We're not going to touch it because, as I keep repeating, as I do every week, the further above the blue dot you are, the greater the risk. Your stop loss goes under the blue dot. We don't want to get in over here, and our stop loss is way down there. It's too much risk. I agree. We're all about low risk trades only. If we're not sure, we move on to something else. If it's a no trade zone, we move on to something else. There's plenty of markets to trade. We only trade that the signal is really low risk. You can't lose a lot of money that way. You'll definitely get some losing trades for sure. But, the losses are going to be small. Here's your sweet spot today, right, or a little after 10 o'clock Eastern. I love, as I said before, I'll repeat, I love when the prices pull back. You get the green bar, stops, goes all the way back to support. So now we can get in at a lower price, at a better price, and it goes back to blue again. That means the uptrend is going to start to resume shortly after. So now we can get in at a great point. And if we're wrong, and I repeat for the fourth time now, there will be losing trades, or stop losses right there. Second lower blue dot below the price. We only got about 4 points here at risk. Actually, it's about 5. You're talking, 5 times 20, it's $100 stop loss. In the trading world, that's a low risk trade, very low risk. But from here till we got stopped out right down here, you're looking at a pile of money right here. That's 20 points. It's a nice little trade right there. 20 times 20, it's a $400 move. And if you didn't pick that up, or if you did get, after you made a little bit of money there, if you took that AbleTrend signal, there's your classic sweet spot that I keep talking about every week, year after year. Blue bars right on top of the blue dot. It just doesn't get any better than that, regardless of what happened, because it's not always going to be a winner, but more often than not, it's going to be a winner. And even if it isn't, because we always want to know, well, what's the worst case scenario if it doesn't happen? Our stop loss is right there. These dots are slightly lower than these. How much do we have at risk? 1 point. Let's even call it 2. It's only 1. Let's just exaggerate and make it worse. Call it 2. That's a $40 stop per contract. It just doesn't come any better than that. It doesn't come lower risk. It's just not possible. And how did it do from there? Another home run. After a 20-point winner, we're stopped out right there. Because there's the second lower blue dot. So we're out at 33, in at 20. That's another 13 points. I'm looking at 33 points yesterday. 2 trades. Very clear cut, no guesswork, real simple, just following the signals. That's all you got to do. People say, it's too simple, it's not going to work. We're here 20 years. We didn't have a lucky month or a lucky year or a lucky week. It's going on for 20 years now. So let's fast forward to today. Today, didn't have many big moves today. That's another thing. We're all at the mercy of the market. The market doesn't move much. Nobody's going to win, us included. Well, how can we? How can anybody? If it doesn't go up or down and it just stays in a really narrow trading range, well, obviously, nobody's going to win much money that day, if anything at all. But the good part about the guidance chart, it's going to keep us out of choppy markets. Most choppy markets, not all, most choppy markets. It's not perfect. I keep repeating that because I don't want to mislead anyone. Wouldn't want that done to me. First trade of the day here when the market opens, no trade, obviously. All the red bars are all at the red line, but like I explained before, we can't start our trade there. So what do we do then? We wait for the sweet spot. A sweet spot, once again, is a pullback back up to the red dot. The bar goes from green back to red. There's the sweet spot. How did we do on that trade? We lost 2 points because we had to get out here, blue bar, blue dot. Well, I point out the losers too. It's not all perfect. Just so happens lately it's been pretty close to perfect. But for sure, for the 5th time now, we will have losing trades. I don't want to mislead anyone. Here's your sweet spot, and here's your next trade going along. Obviously, we're not touching it here, all red bars and red dots. Now over here, I don't like the distance there. We use the 6-point rule. If it's more than 6 points above the blue dots on the mini NASDAQ 3-minute, 9-minute chart, don't take it. Not going to take it. It's got to be low risk only. There's your sweet spot. Green bars, back to blue, close to the blue dot. You're only 2 points away. Triple confirmation. No red dot above. Everything is just lined up like I've been talking about for the last 20 minutes. That's just what we're looking for. Picked up the 2 points we lost because we're out over here. Picked up the 2 points we lost before. No trade here, of course not, because you have red dots and blue dots at the same time. That's a no trade zone, and that's pretty much the end of the day. It basically was a flat day, broke even. Maybe you lost a point, maybe you made a point, virtually a break-even type day.